You know that feeling when someone at a party says, "Oh, I'm putting money in the market," and you just nod like you totally get it, while internally you're thinking, "Wait, what market? Where is it? Is it a building? Are there guys yelling numbers? Am I supposed to already know this?" You're not stupid. Nobody explained it to you. Somewhere along the way, everyone just agreed to pretend they understand the stock market so nobody has to be the one to ask the dumb question. So today, I'm asking the dumb question for you. And by the end of this video, you're going to understand it better than most people who've had money in it for 10 years. Let's start with the thing nobody tells you. The stock market is not a place. It is not a building with a bell and guys screaming, even though, yes, that building exists in New York, but honestly, it's basically theater at this point. The real stock market lives on computers. It is a giant, constantly updating list of prices for tiny pieces of companies. That's it. That's the whole concept underneath all the jargon. Companies sell tiny pieces of themselves. People buy and sell those tiny pieces. The price goes up when more people want to buy than sell, and it goes down when more people want to sell than buy. Every single thing you've ever heard about the stock market is some version of that one sentence. Let's make it real with two people. Meet Sam and meet Priya. Sam has a coffee shop. Just one. It's doing fine. It's profitable. But Sam wants to open 10 more shops, and he doesn't have the cash. He could go to a bank and take out a loan, but loans have interest, and Sam doesn't want to be handcuffed to monthly payments for the next 10 years. So instead, Sam does something else. He says, "Hey, I'll sell you a tiny piece of my coffee shop business. Not the whole thing, just a sliver. If the business grows, your sliver grows in value. If it shrinks, your sliver shrinks too." That sliver is called a share, a stock, same thing. When Sam does this for the first time, in a big official way, that's called an IPO, an initial public offering. It just means for the first time ever, regular people like you and me are allowed to buy a piece of Sam's company. Now here's where Priya comes in. Priya doesn't know anything about running a coffee shop. She's never pulled an espresso shot in her life. But she walks past Sam's shop every single day, and there's always a line out the door. She thinks this business is clearly working, so she buys a share. She's not buying a coffee shop. She's buying a bet. A bet that Sam's business is going to be worth more next year than it is today. And here's the part that changes how you see literally every stock ticker you've ever glanced at and not understood. The price of that share isn't set by Sam. It's not set by some finance committee in a back room. It's set by every single person like Priya, all deciding at the same time, right now, in real time, what they think that tiny piece of the company is worth. That's the whole market. Millions of Priyas, all guessing, all trading, all day, every day. Let's talk about why the price actually moves, because this is where most people get confused. They think stock prices go up because the company did something good, and down because the company did something bad. Sort of true, but not the real mechanism. The real mechanism is expectations. Here's the jacket analogy, because I want this to actually stick in your brain instead of leaking out in 20 minutes. Imagine you're at a store and there's a jacket. Everyone in line thinks that jacket is going to sell out any minute, so people start grabbing it fast, even paying more than the tag says just to make sure they get one. The price of that jacket in that moment isn't about the actual quality of the stitching. It's about what everyone believes is about to happen to it. Stocks work exactly like that jacket. If Sam's coffee shop reports that profits went up 10%, but everyone expected profits to go up 20%, the stock can actually go down. Not because the business did badly, because it did worse than what people were betting on. This is why you'll see headlines like, "Company beats earnings expectations, stock still falls." And you used to think that made no sense. It makes perfect sense now. The market isn't grading the company's homework, it's grading whether the company matched what everyone already guessed. Now, let's talk about the two ways you can actually make money doing this, because this is usually where people either get excited or get reckless. And I want you to end this video in the excited but smart category, not the reckless category. Way number one, the price of your share goes up and you sell it for more than you paid. Simple. Priya bought her share of Sam's coffee shop for $10. 2 years later, Sam's opened 15 locations, and that same share is worth $40. Priya sells. She made $30 in profit. That's called a capital gain.
Way number two, some companies pay you just for holding their stock. It's called a dividend. Basically, the company says, hey, we made a profit this quarter, here's a little slice of it, just for being an owner. You don't even have to sell anything. The money shows up. It's not huge, usually a few % a year, but it adds up, especially if you let it snowball over time, which we're going to talk about in another video, because that's a whole separate concept and it deserves its own spotlight. Okay, now the part you actually came for. Why does this matter for your life? Specifically, not in a textbook way. Here's the thing nobody says out loud. If you only ever save money and you never invest any of it, you are guaranteed to lose purchasing power over time. Not might, guaranteed. Because prices for everything, groceries, rent, gas, they creep up every single year. That's inflation. And if your money is just sitting in a regular savings account, earning basically nothing, it's quietly shrinking in what it can actually buy you, even while the number on the screen stays the same or grows a tiny bit. The stock market, historically, over long stretches of time, has grown faster than inflation. Not every year. Some years it drops hard and it's terrifying and you'll want to look away from your phone. But zoom out to 20, 30 years, and it has been one of the most reliable ways regular people have built actual wealth without needing to invent the next big app or win the lottery. This is the difference between money that works and money that just waits. Cash in a jar under your bed is money that waits. It's the same amount next year as it is today, except it buys you less. Money in the market is money that works. It's out there, tied to real businesses, growing or shrinking with them, doing something instead of just sitting there hoping. Now, let's kill the myth that's stopping half of you from ever starting. You think you need to be rich to invest. You think investing means picking the next big winner, staring at charts, guessing which company is about to explode. That's not investing. That's gambling wearing a suit. Real investing, the boring, proven, actually works kind, usually looks like buying a small piece of hundreds or thousands of companies at once through something called an index fund, instead of betting everything on one company like Sam's coffee shop. You spread the bet. If one company fails, it barely dents you because you own a tiny piece of 1,000 others too. Boring money is what keeps your life exciting. Let that sit for a second. The goal isn't to feel like a genius trader checking your app every hour. The goal is to set something up quietly in the background. Let it grow slowly and unglamorously for years, so that later, your money is doing some of the heavy lifting, instead of just you. Let's go back to Priya one more time, because I want you to see the two versions of her life side by side. Version 1, Priya never buys that share. She keeps every dollar in cash. 10 years pass. She still has her money, technically, but rent went up, groceries went up, everything got more expensive, and her money buys noticeably less than it used to. She worked just as hard. She just didn't let her money work at all. Version 2, Priya buys that share, and more shares after it, a little bit at a time, consistently, even when it's boring. Even when the market dips and it's scary, even when she doesn't feel like it. 10 years pass. Her money didn't just sit there. It was tied to real, growing businesses the entire time. It grew while she was living her life, going to work, seeing friends, not even thinking about it most days. Same starting point, same 10 years, completely different outcome. Not because version 2 Priya was smarter or luckier, because she understood that money left alone loses value.
but money invested has a chance to build it. Here's your dollar rule, and I want you to actually remember this one. Every dollar you're not using right now is either working for you or quietly losing to inflation. There is no neutral option. Cash isn't safe. It's just slow motion losing. That's not fear-mongering. That's just math. And once you see it, you can't unsee it. I'm not telling you to go dump your whole paycheck into some stock you saw mentioned in a group chat. That's not what this is. That's the reckless category, and I promised you we're staying out of that one. I'm telling you that understanding this system, actually understanding it, not just nodding along at parties, is the first real step toward making your money do something for you, instead of the other way around.
You don't need to be a genius. You don't need to time the market perfectly. You need thousands of dollars to start. You need to understand what's actually happening when you put money in, and then you need to let time and consistency do the quiet, boring, powerful work that most people never stick around long enough to see. You get to decide which version of Priya you become. And now, unlike most people, you're actually starting from understanding instead of guessing. If this made the stock market finally click for you, hit subscribe, because we're going deeper into this stuff every week, and I'm not going to make you feel dumb for asking the basic questions. And I want to know, right now in the comments, be honest with yourself for a second. Do you currently have any money sitting in the market, or is it all just sitting in a jar under your metaphorical bed? No judgment. I just want to know where you're actually starting from.